Welcome to lecture series in capital market. Today we are going to discuss about floating of securities or methods of floating of securities in the primary market. Methods of floating new issue. Here we are going to deal with the methods of floating new issue. Various methods of floating new issue are: first one, public issue; second one, offer sale; third one, private placement; issue of Indian depository receipts; right issue; then bonus shares. These are the various methods used for floating of new issues or methods of floating of securities in the primary market. The first method of floating in primary market is the public issue. When a company raises fund by selling or issuing shares, debentures or bonds to public through issue of offer documents, this offer document is known as prospectus. It is called public issue. That is, issue of shares, debentures, bonds by the companies to the public through the issue of offer documents or through the issue of prospectus is called public issue. That is, provision of securities, bonds, debentures, etc. to the public through the issue of a document which is known as offer document or prospectus. This is one of the important method of providing securities or selling securities in the primary market. Here, selling or issuing shares, debentures, bonds to the public through the issue of offer documents, or which is offer documents is known as a prospectus, happens is through the prospectus. This consists of initial public offer, IPO, or follow on public offer. These two methods are used for providing shares, debentures and bonds to the public in the primary market, that is initial public offer. What is an initial public offer? When an unlisted company make a public issue for the first time and gets its shares listed on stock exchange, it is known as initial pub. When a unlisted company makes a public issue for the first time, they makes public issue for the first time and gets its shares listed on stock exchange, it is called as initial public offer, IPO. That is, an unlisted company makes public issue for the first time and it is get listed on the stock exchanges. Second one is FPO or follow on public offer. When a listed company makes another public issue to raise the capital, it is called follow on public offer. Initial public offer is by the unlisted company makes first time issue. Follow on public offer is by the listed company when it makes another public issue. Here unlisted company makes issue the securities and they get listed. When this listed companies makes another public issue it to raise capital, it is called follow on public offer. Here it is by the listed company. When they get listed, it is known as the follow on public offer. This is the first method. Second method is offer for sale method. Security or selling security in the primary market is offer for sale. In the offer for sale, the mechanism is like this. Institutional investors like venture fund, private equity funds, etc. invest in unlisted company when they are small. Subsequently, when the company becomes large, these investors sells their shares to the public through the issue of offer documents and the company shares are listed in stock exchanges. This is called as offer for sale. The proceeds of this or the income from this issue goes to the investors, not to the institutional investors like venture capital, venture funds, private equity funds, etc., or invest in unlisted companies. When the company becomes large, these investors sells their shares to the public, listing in the stock exchanges, and they earns money or the investors earns money from this. This process is known as offer for sale. Here, the income goes to the investors, not to the company. This type is known as offer for sale. That is initial investment by these agencies. When the company is small, when the company becomes large, the investor sells the securities to the public by listing in the stock exchanges and they earns income. Third method is private placement. This method means the sale of securities to a relatively small number of selected investors raising capital. That here the feature is sale of securities to a relatively small number of selected investors. That is private placement. The investors may be large banks, mutual funds, insurance companies, pension funds, etc. Opposite to the public issue. In the private placement method, sale of securities is to the a relatively small number of selected investors like large banks, mutual funds, insurance companies, pension funds, etc. Fourth important type is issue of Indian depository receipts. This is another method of selling securities in the primary market or floating of new issues, that is issue of Indian depository receipts. The method is that a foreign company listed in stock exchanges abroad can raise money from Indian investors by selling shares. Here, these shares are held in trust by a foreign custodian bank against which a domestic custodian bank issue an instrument called Indian depository receipts. It can be traded. Indian depository receipts can be traded in stock exchanges like any other shares, and the holder is entitled to the right of ownership, including receiving the dividend. That is, this is a method by which a foreign company listed in stock exchanges abroad raises money from Indian investors by selling shares which is held in trust by a foreign custodian bank and against which a domestic custodian bank issue an instrument or certificate. This instrument is called or instruments are called Indian depository receipts. These shares are issued by a foreign company and in favor of these foreign companies a domestic bank issue an instrument to the Indian investors. That instrument is known as the Indian depository receipts. It can be traded in the stock exchanges like other securities and income dividends goes to the Indian investors. This is the fourth one. Therefore, the first one is selling to the public. Second one, small. When a company is small, institutional investors purchases. When it becomes large, it is offered for sale in the stock exchanges and the proceeds goes to the investors. And third one is private placement method. Here the selling is done to a relatively small number of selected investors. And another method is the in the depository receipts. It is by a foreign company listed abroad, issued by a foreign company listed abroad. Then for Indian investors can invest by selling shares. Then next one is in the depository receipts in which a foreign company listed in stock exchange abroad raises money from Indian investors by selling shares which is held interest by a foreign custodian bank, and a receipt is issued by the domestic custodian bank. This instrument is called in the depository receipts, and this can be traded in the stock exchanges. Method of floating is the right issue. In this, when a company raises funds from its existing shareholders by selling them new shares or debenture is called right issue. This we have already seen what is a right issue, bonus issue, etc. Method: company raises funds from the existing shareholders by selling new shares or debentures to the existing shareholders. And the offer document for a right issue is called letter of offer. And a document is to be provided to the shareholders or to the buying shareholders, and that offer document is known as letter of offer, and it is kept open for 30 to 60 days, and the existing shareholders can get in proportion to the shares held by them. That is, in this method, the existing shareholders have the opportunity to purchase the securities, or they sell securities to the existing shareholders itself in proportion to the shares held by them. And the next one is bonus issue method. Issue of new shares to the existing shareholders is the method. The difference between right issue and bonus issue is that for the right issue we need to pay money, whereas the bonus issue, in the bonus issue method, it is issued out of the reserves or accumulated profit. Therefore, shareholders need not pay in money to the company for receiving new shares. That is the difference between the right issue and the bonus issue, that in the bonus issue method, the shares are issued to the existing shareholders from the accumulated profit, and shareholders need not pay any money for the company for receiving the new shares. These are the important methods of floating of new issues in the new issues, or methods of floating in the primary market. Therefore, important methods are the public issue, offer sale, private placement, issue of Indian depository receipts, right issue, and bonus issue. These are the important methods used for floating of shares, debentures, etc. in the primary market, or method used for selling of securities in the primary market.